Morning.
What happened, Dad?
Yesterday was a tiring day. I had to do 20 withdrawals in last 2 hours.
My back pain almost entire night. 20 transactions. Isn't that less? They just need to withdraw money, right?
Well, yes, they just need to withdraw money, but you know, usually it takes about 10-15 minutes to do a transaction.
15 minutes. Isn't that like very much?
Well, true, but there's a lot which needs to be done to support a withdrawal. We look at the check, then we open register, we find out the account details, you verify signature, and they're all physical books. It takes time.
Well, yesterday I was talking to Nero Bhai's friend who actually came from London, and he was telling about computers which will store data of banks and all the transactions will get quick.
What?
Computers. You need to put customer information in it and it will search from its records. You just need to put withdrawal money in it and all the process is done. You don't need a register for it.
Well, that must be expensive.
Yeah, you will get one for 3 lakh rupees, but the price will decrease as they will produce in mass quantity.
Well, that's expensive. I mean, you can build 2 more branches and serve more customers in that much money. Why would you buy computer?
Yeah, but currently you are serving one customer in 20 minutes. Then with the help of computers, you will serve one customer in 5 minutes.
Well, how can it be reduced to 5 minutes?
Because it has a software and a processor of that speed, which also can type faster than writing on a paper and can store data quickly.
Well, don't you need people who can type so fast? How are you going to teach so many people to use computer?
Well, I have learned through my schooling and you can also learn from classes. It's easy to learn. The bank might set up training classes for this.
So what you are saying is that these banks will first invest so much money in computers. Then they will also invest time and money both in teaching all of us how to use computers, right? If we all are busy learning computers, wouldn't it stop operations?
Well, they may separate employees in batches and then give training. And after like everyone learned it, it might get implemented.
So what if somebody is not capable to learn this? We all know our regional languages and computer is in English. Everybody doesn't know English.
Yeah, I know. But maybe the bank will give basic English language training first.
So what you are saying is that these banks will teach us language and then also computers. Huh?
Yeah.
And who will pay for this? Is your bank from London going to pay all this money?
Well, I'm just...
What? You have got really crazy ideas.
The process of computerization began as early as 1982. Chakravarti Rangarajan, Deputy RBI Governor, knew that unions and employees across all banks will resist the implementation of computers for transaction, and it may eventually lead to failure of plan. This led him to take a passive approach of installing few computers in banks, with the staff being told that it was for data collection as well as analysis and not for transactions. A decision was implemented to computerize check clearing operations. During the entire period from 1982 to 1991, Central Bank tried to reframe many such operations around computers but faced challenges from unions of various states who feared unemployment because of technology.
This is never going to work.
It could happen.
Why would it happen? This is working perfectly with registers.
See, it has got speed, it will save time, it has got processors and hardware and software.
Well, fine. Let's say you learn language, we learn computers, But what about electricity? We get power cuts. Will the bank stop working in those events?
The might there might be an electricity backup for this.
And who will pay for that?
Well, I don't have all the answers right now. Well, they will figure out something.
You got real crazy ideas.
It's not crazy.
Okay, fine. You got everything fixed, your infrastructure and training and all those things. But what if the computer crashes? Have you ever thought about that? You lose everything.
We have people who can fix this, and the internet might also help us for data backup.
Well, so what you are saying is that there will be people to fix computers and internet across India.
Yeah, sure. They might get developed.
I don't think so.
It could happen. There were times when there was no bank and no money. We have it now.
Well, I don't remember such times. When I was born, there were banks and there were currencies. You didn't think through all of this, son. I mean, this ideas looks good on paper, but think about the real world.
Finally, with the opening of economy, private sector banks became the major driving factor for computerization in all existing banks. They had to follow suit in order to survive competition.
Okay, well, what if all the withdrawals are taken care by computers entirely? What if you don't have to involve to any withdrawals for verification for entries?
Withdrawals without human.
Right, the computers, it can be installed across city and people just need to go there and use their identification and they can withdraw money. They don't have to go to bank.
Do you understand how risky it is to take out money from the bank and put it in the machine which is on the roadside?
Yeah, they will have a security to protect.
The banks are physical building and the machines are on the roadside. How can it be secured?
The machines can have lock for protection just like bank buildings do.
What?
Yeah, they are already testing such machine in London and if they are successful, they will launch it across the world.
This time they are talking about ATM. In fact, around 1994, the first ATM was launched in India by HDFC Bank in Andheri, Mumbai. By the year 2008 to 2009, there were about 44,000 ATM across India. It reached to more than 2 lakh ATMs by February 2017.
Wait, I don't know what you've been thinking, but I don't think banks will risk that much. And also, I don't think computers can really do that.
Well,
It's not going to happen in my lifetime, neither in yours.
I would be opening my bank account with a private bank once they come to India.
Yeah, and the government will allow that.
Yeah, they will.
Okay, you are a young man and haven't lived enough yet. One day you will understand that the world doesn't work the way you think. Oh, tried 5 to 6 ATM, none of them have cash.
That's crazy.
Yeah, it's crazy. It's been 3 to 4 days and none of the ATMs are working. I think it's high time where this milkman and grocery people start using e-wallets.
You know what? I've been reading some articles about banking and finance industry, and have you ever heard of this cashless economy?
Oh, have you been reading on your tablets?
Yeah. Have you heard of this? Like economy will be cashless in 10 years.
No, I haven't.
with the change of customer expectation and arrival of nanosecond banking era, digitalization of currency is must.
Nanosecond.
Yeah, for all transactions.
So does that mean that all transactions will be digital?
Yeah, it means that the economy will be cashless and in the form of digital money.
So what you mean is there will be no cash, no coins.
Yeah.
How is that possible? I mean, how will I buy things and what will I withdraw from ATM?
Well, you can buy everything online and ATMs will shut down because there will be no physical currency. All incomes will be in digital form, so circulation of physical money will stop.
Okay, but what about this Dudhwala and grocery stores?
Maybe they would adopt online wallet to receive payments, and most of them have.
Yes, most of them, but a lot of them do not have smartphone, and it is a big cost for them to buy one. And what about the rural population? You know, about 3/4 of Indians live in rural areas, and they don't have this internet, 4G connections, and smartphones.
Maybe they are not buying because they don't need it right now. The government may come up with an different cost-effective idea, like making USSD popular.
Oh yeah, the government will do that.
Yes, and the government will also.
Wait, I don't know what you have been reading on internet, but I don't think there is any need of cashless economy. People are very much comfortable using physical cash.
But the government wants to know the track record of circulation of money. So for that they have to stop physical money. Yeah, every government is taking this seriously, and our government has also openly expressed this by demonetizing. Digital banking licenses are granted to this payment service giants, and this is actually creating challenge for current financial institutions.
There are 3 evolutionary stages expected in the industry in 10 to 15 years' time. First, Internet will become a priority access point to banks or financial institutions. This will more likely replace branch and will make it less important. Second, use of mobile device for transaction on banking websites and apps. This would underline reduction in cash transactions. Third, use of mobile wallet. This would be an evidence for disappearance of plastic money and branches.
This is just a step forward. The actual future by 2050 will be actually dominated by AR.
What?
Augmented reality, Dad. There is some kind of lens which you will wear in your eyes and it will respond to your gestures. And this will be used by this fintech companies. So when I'm at your age, I will be using it and I don't have to go to branch anymore.
How come? I mean, how will you open an account or get a loan?
Well, everything may be linked to your identity, and even the products will be bundled, so you don't have to purchase it in separately.
So, you will buy your insurance through your lens.
Yeah.
So basically your bank is a computer.
The computer will study my requirement, and based on that, it will suggest me some products, and this will be possible through artificial intelligence and big data analytics.
With the current changes, the institutions are more than forced to make changes in below lines, focusing on user experience via big data and social media, adopting less branch philosophy which would be focused more on advisory and less on transactions. Establish 3 touch points with customers, advise customer in their buying process, enrich the offering during buying, help them to recommend their experience to others. Make use of distributed database blockchain. This will enable banks to automate certain transactions.
Artificial intelligence, big data. So what you are saying is you'll never visit branch for anything.
No, the currency and product will be in digital. So I might visit branch through my lenses to talk to an expert sitting in Mumbai or to a virtual assistant of bank.
So you mean you'll listen to an opinion of a robot?
Well, what I mean to say is I'm talking about 2050. The technology will get smarter and smarter. Like these AI robots will learn from my interactions, like Siri in your iPhone.
So what will happen to all the people who are sitting at branch right now to serve customers like you and me?
Well, when computerization happened, it did not take away all the jobs of people. It made them more efficient. Similarly, these AI robots will make people more efficient. People may still be required for complex financial advisory services.
So let me get this straight. What these articles are telling me is that these banks will become a virtual gamepad and people will start interact with your AI robots. I don't think a traditional bank will ever do this.
But fintech companies are capable of doing this in future. They may tie up with these traditional companies.
No sir, you are getting all this wrong. First of all, cashless economy, not possible. Banks without branches, not possible. You are not thinking through your ideas. I don't think a government or RBI will ever allow to transform industry such intensely. Also, who is going to trust a bank called Paytm? Well, no sir, I have seen this industry evolve during my lifetime. I have seen the journey of computerization and it has actually helped the industry. But with this birth of internet and online transactions, the young generation is not able to understand that the center of banking in India or anywhere in the world is trust. I am not going to put my money in a bank which I don't trust.
Maybe you will once they start to grow.
Maybe, but I have an option to remain with my old bank which I trust.
But maybe digitalization will come to a place where physical bank will lose its importance.
Do you mean they will stop to exist?
No, but maybe they will restrict their operation to just making the products, and the other platforms like social media will be selling it to the customers.
Okay. You are a young man and haven't lived enough. And you will understand one day that the world doesn't work the way you think it does.
The expected changes in consumer behavior showcase in today's scenario, customers are exposed to the way smartphones get them connected. With this, the buying has got smarter, comparison and transaction has become easy. Virtually, customers are the king in the buying process since they have the power to choose. Financial services and products are affected by this scenario. In this coming year, consumer demands are likely to be fulfilled by internet, mobile phones, and technological advancement. The needs from banks will undergo great changes in terms of managing finances and processes of buying financial products, which will guarantee a revolution in the industry. The next era of banking would be called as nanosecond banking era. Companies are looking to provide real-time data, transparent transaction and fees, proactive communication, need-based banking, product merging to remove hassles of buying. Several changes that are welcomed by industry involves. There would be more complex evolution of a structure and system that will get sustained over a long time. It is predicted that RBI would focus more on making economy cashless and would monitor and regulate fintech companies. Many big and small players are predicted to lose their share. Regulators may merge the nationalized banks and government financial institutions into one bank or financial institutions. The financial institutions will mandatorily adopt change and enhance themselves in order to remain in the competition. It is also predicted that different products and institutions will merge to become one coherent seller. In next 5 years, one or more of these three situations are possible to take place. First, financial institutions will adopt new methods used by new players. It might achieve this by merging with other large and small players in the industry. Second, the financial institutions will take over the fintech companies or vice versa, which depicts two possibilities. If financial institutions take over fintech companies, they may fail because of their legacy structures, systems, processes, mindset, and cultural barriers. If fintech players take over financial institutions, the success ratio may be higher owing to their flexibility, high risk-taking ability, higher technological investments, and innovations. Third, the partnership and joint ventures between existing financial institutions and fintech companies. This model may work out to be the best for an economy like India, where financial institutions have established high level of trust in the public with their physical presence over these years. whereas fintech companies will still find it difficult to gain market share and trust of customers. The facts reveals that today less than 1% of Indian population will prefer to receive their salaries in these e-wallets. Fintech companies will take 5 to 10 years to establish trust level. Under this model, it is expected that specialized and different product services will emerge. Products will be sold in groups like saving, lending, insurance, etc., and will start merging as one product, which will continue making thinner profit margins for isolated products compared to today. Fintech companies will be driving factor for this and will focus only on customer acquisition. The financial institutions will take up role of financial advisors focused on core financial fundamentals and product designers. The fintech companies will take up role of technology-led marketing focused on designing sales, delivery channels, customer user interface and technology infrastructure. The Global FinTech Report showcased 80 to 90% of existing financial institutions are expected to increase fintech partnership in next 3 to 5 years. Operationally, there would be 5 eminent changes. First change would be on technological front, which would include usage of big data and social media for understanding needs of customers. Analysis and technological experts might dominate the industry in order to improve algorithm and define better parameters of analysis. The call centers may be dominated by chatbots with few expert individuals ready to help in more complex scenarios. Second, branchless philosophy. Financial institutions will focus on advisory and not on transactions. The trained team and experts might become the dominating workforce in the industry. Third, sales channel. Workforce in rural areas of the country may reach the highest at kiosk or through other channels in order to provide guidance and help these individuals to transact through mobile phones and computers. Team division among advisors and sales will happen. Advisors may also advise on other sector products to customers. Sales may only transact the sold product and services, which is likely to be automated with machines in the long run. Fourth, the financial product designers may become a central team with research and development experts. Fifth, changes in human capital. As technology will handle operations, human capital will play role of financial advisors. Skilled and well-trained human capital on technology will be in demand.